Welcome to Classic Value Investors and Microcap Explosions. This is another video in the Why I Hate the Miners video series. This one is special because from the prior videos I learned quite a bit from some of the comments. In other words, if you want to be in mining, you want to stick with, you want to get the cycle right, you want to stick with people like Landin Group. So this one is special because Landin Group is actually a shareholder in this one. And I believe that this one actually caught the cycle right because the other videos, they kind of went bust before the gold bottomed. This one, on the other hand, just completed in 2020. And as you know, the gold price was increasing from 2016 to now. So the cycle, they got the cycle right in terms of the price of gold, and obviously the popularity of gold miners is probably at all-time high right now. Also, one other thing I wanted to say is that you might think, how am I able to produce this series, like one video a day? How is that possible? It's simple. I don't have to do any research because I already know these fuck-ups. Like, I already have a list. I don't have to do any research. I know the story. I know what happened. So I just have a long list. It just doesn't take long. As long as I was involved, pretty much the number of miners that I was involved with, whether I invested or I wrote about them, every single one of them ended up like this, except Oracle, obviously, which was a huge success. But another thing that this one, so the video about this one is about Timmins Gold. And if you watched my video on Gold Group, you know that Gold Group sold one of its properties, Cabal Blanco, to Timmins Gold. And that's how I learned about it. And then this one is also special because you see Kalichi, who is another investor in Oracle, he kind of has ties to Timmins Gold because he was involved in Newstrike and he made a ton of money on Newstrike. I think it was like a 30x or maybe 50x. I don't really know, but I know he was involved in it. And Newstrike was merged or sold Anapola to Timmins Gold. So, you know, we both kind of have ties to this company from different angles. So the story of this company is that it had a producing asset called San Francisco Mine, and then it acquired two assets, Cabal Blanco from Gold Group and Anapola from Newstrike. So that's it for now. Let me play some videos and then I'll get more comments after that.
Wonderful good day, ladies and gentlemen. Commodity TV, and it is again company presentation time. We want to present you today Timmins Gold. Let's first start with a little overview about the company. Timmins Gold is a Canadian production and development company with a profitable gold production in Mexico. The company is listed at the Toronto Stock Exchange and the NYSE in the USA. Timmins Gold operates the San Francisco gold mine in Sonora, Mexico. In 2013, they reached a record production of nearly 121,000 ounces of gold. The 2012-2013 drill program raised and expanded the reserves around 20%, the measured and indicated resources 30%, and the inferred resources by 77%. The new mine plan increases the life of mine, the LOM, now to 9.5 years with a 122,000 ounces yearly production predicted. The strong exploration potential at San Francisco and the region should enable the company to expand their operation in the future. The company has 153 million shares outstanding and a market cap of around $225 million. Cash stands at $14 million and the debt is currently paid back through a bought deal of $25 million with Canaccord. But let's talk about the San Francisco mine. The main asset are the two at 100% owned by Timmins open pits called San Francisco and La Chicara. They are operated as a heap leach plant. The property has a size of 45,000 hectares with an excellent infrastructure in a desirable location. The gold reserves stand at nearly 1.6 million ounces with 91 million tons at 0.54 grams gold per ton. The mineralization is still open along strike and down to the depths. Some data, facts and figures are about Timmins Gold. Shareholder basis. They have 64% institutional shareholders, 4% holds the management and 32% is owned by retail shareholders. In a full cost comparison for 2014, Timmins leads the peer group with approximately $940 per ounce and is in front of Osisko and Rio Tinto. Some valuation metrics. Timmins has a 4.9 multiple price to cash flow ratio. The price to net asset value multiple is at a low 0.73. Both relations show the low valuation in comparison to the peer group. Overall, Timmins looks like a healthy company, and with their enormous land position, they should have still a good production future beyond the 9.5 years. Life of mine today and lots of room for exploration. The total cost situation below the $1,000 per ounce of gold level leaves them still enough room to make money in this low gold price environment with a nice margin. This is an interesting and good managed company which should benefit a lot from a rising gold price. So watch out for the company, make your own due diligence. Thanks and watching Commodity TV. Bye bye.
Okay, so far we learned San Francisco gold mine in Mexico, 9 years life of mine at a production rate of 122 ounces per year. That, huge land package that can be expanded. Market cap over 200 million, about 240 million. Cash in the bank, 14 million. Not much debt. Shareholders, Lundin, Sprott, Lundin here. That's the key here. And cheap, right? Cheap in comparison to the players, cheap in comparison to the cash flow, trading at 4.9 times cash flow.
I think first of all we should talk about your terrific first quarter numbers.
Yes, the record first quarter financial numbers came on the back of a record production quarter. We made over $12 million. We also had net earnings of around $8.5 million. And the money is, money's flowing in. We have free cash flow. And after years of hard work, we're able to reap the benefits of a good-sized mine in a good jurisdiction.
And also you did, I think in February, mid of February, you did a financing and you paid back some of the debt, right?
We did. We had $18 million in debt to Sprott Lending. We used the proceeds, or part of the proceeds, of a $26 million net financing to pay $5 million down on our debt. We retained about $21 million of that money in the bank account in order to have a good, strong balance sheet going forward.
How was the development of the all-in costs, and of course cash costs and all-in costs for the last quarter, and where do you see it for the next, let's say, 2 quarters?
Well, it's a tribute to the operating team that we had the same cash costs of $703 last quarter that we had in 2013. So despite the fact we've gone to a little lower grade, we've still maintained the same cash costs. Our all-in costs were around $850, so those were very good. Those are among the best in the gold industry.
So that means even at those gold prices, you really make money, as you said before.
That's right, yes.
Even if it goes out to 1,200, you make money.
Yes, we'll make money. We've run plans down to $1,000. We'll make money down to $1,000.
Perfect. Okay, so I would say that's a solid basis. That's a stable fundament.
This is wonderful, don't you think? They can make money even in such a low gold environment. I mean, that's like a perfect investment because they can stay in business, and when the price of gold goes up, then you will just make a ton of money on the leverage from the price of gold.
Let's talk about the future, because you have now one mine. It's one large open pit, the San Francisco mine. What could be next? Because you have 200,000 hectares of land. What is the plan for exploration, and I would call it for organic growth, as you have the possibility to do it?
Right. We've expanded the mine over the last 2 years, and now we've somewhat reached the end of the expansion phase. We still have some more expansion to go, but right now we finished for a little while. The mine is running beautifully. It's running at its capacity that we have on the crushers. Now we have the cash flow, and we have the time for our geologists to, since we also finished a big drill program over the last 2 years, which increased our mine life to 10 years, we now have the ability and the time to branch out from the main mine. It was quite easy to drill off more ounces around the main mine in the last few years. Now that we've done that, we're going to be expanding our exploration programs to cover our 200,000 hectare land package. So we have identified many targets on that package. Our prospectors and our geologists have been very busy over the last few years. We had a lot of data that we've gained over the last few years, and now we're using it. So we'll have the drills turning. We should have a 50,000 meter drill program organized to test those various...
For this year?
For this year, right.
That's a lot.
To test those various targets.
Yeah. Where do you estimate the costs? Is it expensive to drill in Mexico? I presume not, right?
It's actually fairly inexpensive to drill there. We have nice flat land, which is a real advantage. We don't need any helicopter support. We can just drive the trucks that carry the drills right onto the site and drill away. So it's very cost effective to drill. It's about $35 a meter for the drilling alone, and
That's
you have
really
assaying on top of that. So
wow.
It's inexpensive to drill there.
What amount of ounces do you need, or what do you need to find to build a new mine there? Or let's say a new open pit in addition.
So as you can see, the plan is to find another mine in that area. That's how they're planning to increase the production.
I think historically in Mexico, once you had 500,000 ounces, that was deemed sufficient to start a new mine. The advantage that we have is, since we have an existing operating mine in the district, we can leverage the expertise that we have from that mine, the geologists, the administration, the purchasing power, in order to build another mine. If we're successful with our drill program and we define a new ore body outside of the main claim block, which is about 10 kilometers away, if we're able to do that, then we can build another mine similar to San Francisco. Our guess is somewhere in the range of $50 million, which is very inexpensive.
Of course it's cheap. Cheap, fast, inexpensive, of course.
Yeah, that's not that much.
No, that's not that much at all. Given the current cost structure of mining around the world and CapEx, that's a very inexpensive mine.
Yeah, and to me it looks like, because $50 million, if I look at your free cash flow, if I look at your profits even also from the quarter now, you can pay it by yourself. Where you mustn't lend a lot of money also or something else. I would say it's organic growth, as I said before. And it's one thing, and I think you can lift a lot of synergies, because you have the team, you have the drills in place, you own the whole thing, and you have a big processing plant anyway, water, grid power, etc., right?
Yes, this part of Mexico is fantastic to work in. As I said, we have flat land, we have power from the grid, we have water from big aquifers, so it's a very good place to work. And we could take all of the expertise we've gained drilling over the last few years. Now, we've drilled some of these satellite targets already. We found gold basically everywhere we've drilled. It's just a question of tying it all together. So now we're honing in on some high priority targets that we're very optimistic about, and we'll see how the drill programs work out. But if we're able to find another ore body in our claim package, then we can put another mine in there very inexpensively.
Yeah, sounds absolutely great to me. Ladies and gentlemen, that was Bruce Bacagnoli, CEO of Timmins Gold. Yeah, you heard it. There is 200,000 hectares, lots of property space left to drill out. They found already a lot of targets. The drills start immediately to turn. You heard it from Bruce already here. And 50,000 meters they want to drill at least. And it's only something like $5 million. And to find a new ore body, then they have a second mine. So have a very close look at the company. Thanks, and bye-bye from Munich. Timmins Gold. Gold at $1,200, a nightmare for a lot of companies, but thank God, not for you. How was the last 2 quarters? I'm sure you had a tough time, but you still make some money, right?
We did. Last quarter, we had $11 million in earnings, despite the declining gold price. And we've run our costs, and we're good down to about $1,000 gold. That's our break-even point. So even in an environment like this, we can still continue to make money.
Great. What are the plans for the San Francisco mine? You want to raised the production. You produced something like 125,000 ounces, right, last year. What is the guidance for this year?
The guidance for this year is between 115 and 125,000 ounces.
Yeah.
And the challenge for us now that we've built the mine out to specification, the challenge is to see how we can expand our production. We've got a few things we're looking at. One thing we're looking at is increasing the capacity of our crushers, and we should have that completed by the end of the year if we proceed. The second thing we're looking at is another scenario for underneath the pit. We found when we remodeled all of our data that there's a higher grade zone underneath the pit. Mm-hmm. And we're looking at ways to mine that and also bring that into our reserves. That could be a substantial, that could bring about a substantial improvement in our net present value. And as well, we're exploring. The best thing we can do is find a second or third San Francisco mine by exploring out in the desert around the mine. Mm-hmm. And that's what we're working on right now. Mm-hmm. We found very similar rocks to the San Francisco mine. We found targets of similar size to San Francisco. So we've got our fingers crossed right now as we drill.
Mm-hmm. And of course you finance everything out of the cash flow, that's for sure, as you make money.
That's right, yes.
Yeah, great.
That's always been our plan.
Yeah.
If you look back to 2007, the plan as we mapped it out was to take the mine to production and use the cash flow from production to explore and find other mines in the district. That's why we have 200,000 hectares. We're very excited about this land package, and only now are we able to give it the time and the drilling that it requires.
Ladies and gentlemen, that was Bruce Bacagnolo, the CEO of Timmins Gold. Well, you heard it. For the right price, the company is for sale. I don't hope so, because the guys did a fantastic job so far, and I think it's one of the most successful operations in the last 6-7 years. They can squeeze the costs down, so there shouldn't be a problem even if gold goes to 1,100 or 1,000. They still make some money and they can survive. You heard it, healthy balance sheet, over 60 million then by the end of the quarter in the bank, and they will pay all the debt back by year end. So fantastic company, they do well, it's substantial and it's quality. Have a look on it. Thanks and bye-bye from Munich.
Okay, so up to this point, the entire discussion has been about the San Francisco mine and, growing the production because it was cash flowing and so successful. And, they just needed to spend a little bit of money to find the second mine. No problem. And as a result of this, the stock was going to continue increasing, right? Do you think they found a second mine? Do you think they increased the production? I think you know the answer to this. Actually, what happened is that Century Investments, who was one of the top, or maybe the top hedge fund or fund invested in it, they accumulated like 17% of the shares during the good times, and then they got angry, and then they started pointing fingers, and they wanted change. So no problem, Timmins Gold's management was going to deliver change. So that's where the acquisition of Cabal Blanco and Ana Paula came. They couldn't grow the production from the San Francisco mine, but they were definitely going to grow it from Cabal Blanco or Ana Paula.
Then, at the end of the year, we managed to buy the Cabal Blanco project, an open pit heap leach project in Veracruz, Mexico, and the Cabal Blanco project will be a nice pipeline for us going forward. It'll be a great project over the next couple of years as we permit it, as we build it.
Did you hear this? As we permit it and we build it, right? So Gold Group sells Cabal Blanco to Timmins, right? They couldn't get the permit, but Timmins magically is going to get the permit and build it. And what you have in front of you is a presentation from Timmins Gold, how they were going to increase production with Cabal Blanco. You see that? The yellow here is Cabal Blanco. So by 2017, their production profile was going to go to 231,000 ounces of gold per year because of Cabal Blanco.
And then more recently, and this is only the last 4 months, We also are doing a plan of arrangement. The shareholders of New Strike Capital have agreed to put their faith in our operating team, and we're going to do a merger with the shareholders of New Strike and combine the companies, and that will put the Ana Paula project into the new company. And the Ana Paula project is a high-grade, open-pit project in Mexico, in Guerrero, with a mill. And we're going to be looking at all the ways we can to optimize the pre-feasibility study, maybe a little more drilling, some metallurgy, and we intend to advance that project rapidly to production. The PEA says that once in production, the cash costs will be $486 an ounce, and the all-in sustaining costs will be $526 an ounce. So we feel we've taken the opportunity in a bad market to enhance our cash flows, to reduce them once both new projects are in production. That'll reduce our cash costs by $200 an ounce to ensure we make money in any gold price environment. So we protected the downside, and if we get some upside in the gold price now, then we're really going to see the company fly.
Fantastic. Well, that sounds like a great game plan also for the future. And I find it very interesting that you are doing this now in this low price gold-silver environment. So obviously, you want to be protected on the one side for the future, that you make sure that you have the growth. And on the other hand, I'm sure you're taking advantage of, let's say, good bargain prices.
Well, if you don't buy now when things are relatively inexpensive and available, when can you buy?
Right. How do you want to finance all those new setups? I mean, that needs money, obviously. You have a positive cash flow. You are still earning money, of course, despite the low prices. But what is the plan for that now?
Well, the first thing we have to do is look at what the capital requirements really are for each project. We've been relying on information from third parties and others. So we have to get into each project, spend the rest of the year trying to really get a handle on what the actual costs are going to be. By the end of the year, we'll be a lot closer to making a production decision with real costs. And at that point, we'll be able to make a decision about financing as well.
You just had some results out which were, I don't know, maybe not really satisfying. They were okay, but I think maybe you can comment a little bit on that.
Yeah, we're in a low-grade part of the mine plan, for one thing. And we just had a quarter that wasn't as good as our previous quarters. We'll catch up through the rest of the year.
So it was like a one-time thing.
Well, if you look at our last few quarters, it's been the lowest quarter for the last 9 or 10 quarters. So, yeah, it's just one of those things that happens in the life of a mine. And now we'll be catching up for the rest of the year.
No problem. They'll just catch up. They just had a one bad quarter. Now they're going to catch up. Didn't I tell you in the other video when Gold Group sold Cabal Blanco and then the price was 30 million and then they took 10 million of cash and 15 million in Timmins shares and then 5 was to be received later, but that 15 million within months the stock of Timmins went down by more than 70%, and then this money for us Gold Group shareholders was worth less than 5, but they're gonna catch up.
Great update, and I'm sure we're going to have shortly some good news on your new project.
Yeah, let's hope so.
Great, thank you very much. Ladies and gentlemen, it was Bruce Braganiolo, the CEO of Timmins Gold. Well, you heard it, they bought in 4 months 2 new projects, and they want to bring them, of course, into production so they can finance the thing out of the cash flow on the one hand. On the other hand, I'm sure they will get a good project finance on that. And one is for sure, now to buy good properties at a bargain price, it makes really sense. So you see the management is planning on the future. They have a long-term view. That's what we like also with the companies. And check out Timmins Gold. I'm for sure at those bargain prices with the stock. That makes sense to have a look on it. Thanks and bye-bye from Stuttgart from the Invest.
Okay, finally you heard all the plans from the beginning. San Francisco mine, cash flowing cow, was going to increase the gold production by finding a second mine. Then the biggest shareholders were annoyed that the company wasn't delivering. This forced the company to acquire Cabal Blanco and Ana Paula to solve the problem of production. So again, I'm going to ask you, do you think they put Cabal Blanco into production? Do you think they put Ana Paula into production? What ended up happening on May 2016, Timmins Gold sold its Cabal Blanco to Candelaria Mining for $12.5 million. So in other words, they acquired it for $30 million at a fire sale price, right? It was a perfect time to buy. Just a little bit later, they sell it for less than half what they paid for it. And they sold it back to the same people that are behind Gold Group. But those people are obviously bought it under a different entity, Candelaria Mining, instead of Gold Group, because Gold Group is broke and they somehow, raised money to do this transaction through Candelaria Mining. Eventually, Timmins Gold changed its name to Alio Gold, and in July 2020, Alio Gold, former Timmins Gold, was merged with Argonaut. In other words, Argonaut bought Timmins Gold for $60 million. So I actually consider it a success because the market cap from the beginning of the video was 240. So I consider it a success because only 75% of value was destroyed versus 98% or 100 that was destroyed on the other examples in this video series. And of course, this all happened during an increasing gold price. So yeah, as long as the gold price will go up, your miners will do just fine.